Welcome to Beyond the Valley, a CNBC tech podcast with Arjun Kharpal and Tom Chitty.
Beyond the Valley.
It's that time again when Arjun and a merry band of special guests predict what next year will look like for the tech industry. In the final episode of 2024, we'll be discussing whether the AI boom will continue into 2025, where crypto is headed, how China and the US tech war will play out, whether big tech is facing more regulation, anticipating the next tech products to be released, and finally, how fintech could get an AI overhaul of its own.
Beyond the Valley.
Let's start with the bad news. No stat of the week this week, but throughout the podcast, we will be reflecting back on the predictions made last year and see what we got right and what we got wrong. Arjun, are you looking forward to finding that out?
Not really, no. I'm quite scared. I didn't listen back to the pod from last year.
I did.
Because I was a bit worried about what I said, what other people said. You have, yes. So at the end of the episode,
don't worry, there's no
it will
howlers.
All be revealed.
There's no howlers in there. So I just want to first, this podcast last year, the top tech predictions for 2024, was one of our most popular podcasts. Why do you think that is?
Look, the technology industry is just changing so rapidly. I'll be honest, 2024 was one of the most, I think, exciting, fastest paced years in technology I can remember in my career here at CNBC. And so it's about trying to anticipate what's coming next. And that's important for investors. It's important for companies and important for all of us as well as consumers. How is technology going to change our lives? And so we want to try to get a handle on that. We want to know what we might be working with next. And I think that's why people are so intrigued by the future and what 2025 holds.
Nice. All right, let's get to our first guest. His name is Eric Liaw. He is general partner at VC firm IVP. He invests in and works with entrepreneurs and startups. Eric is going to talk to us about what's next for AI in 2025. Because this is Beyond the Valley and we have a whole host of guests from around the world, the only time we could speak with Eric is when he's just about to board a flight in Japan near Osaka. So if he sounds like he's in an airport, it's because he is. Eric, thanks for joining us on Beyond the Valley.
It's great to be here. Thank you guys for having me.
When it comes to AI this year, we've heard lots about NVIDIA and large language models. Is that set to continue next year?
I think so. To be candid with you guys, I was pretty impressed by that Fugato announcement that NVIDIA put out, where they're going to start integrating additional audio capabilities at the chip level. I thought it interesting that they're not going to release that to the public just yet. It's maybe more of a flex to show what they can do. But I found that to be quite interesting and impressive because it's kind of blurring the levels of the architecture from infrastructure up to application in AI. And it's happened faster than I think we might have thought.
And Eric, we've spoken a lot about the sort of infrastructure layer this year, and then also sort of the cloud players and the hyperscalers and the cloud services. For next year, how much is the focus going to shift to actually the applications being built on top? And if so, what are some of the promising applications out there or types of applications we may see?
Well, I think that there's already a lot of interesting stuff going on at the application layer. I just don't think it's written about quite as much because the amount of money that the application layer companies need to raise isn't as large, and therefore the valuations aren't necessarily as eye-popping, and therefore it's probably not quite as interesting as a story for the media to cover, and that's just human nature. But I think we're starting to see a lot of that activity pay real dividends and real value, and I can give you an example of that. And full disclaimer, IVP is an investor in this company that I'm about to mention, but Abridge is an AI-powered medical transcription company. And if you've ever been to a doctor, and recently I went to one in London, private practice, so not NHS, but the first thing you typically do with your physician is you walk through, why are you here? And in this case, it was a specialist that I went to go see, renowned expert in the field. And when we went through that very routine set of questions, why are you here? He pulled out a printed blank piece of paper on one side and printed forms on the other, and a very nice ballpoint pen, and started writing down what I was saying. And it made me feel like, wow, I can't believe that this is the state of the art in 2024. And so Abridge actually eliminates that process because the physician on the intake process will actually have a recording device, usually a phone, a smartphone, and put it there, and you'll have a natural conversation, and you're capturing far more information, far more accurately, and then it goes into your file, which is an electronic one, by the way, much more quickly. And we don't really talk about that, but that's the kind of stuff that I think really can change people's lives for the better.
Fascinating, Eric. And we've spoken a lot in 2024 about large language models. There is also a conversation happening about models that don't need to be as big and perhaps are more specific, more targeted. Do we begin to see the popularity of perhaps smaller models gain prominence in 2025?
I think that's a distinct possibility. And the rationale behind that would be it's really hard to be all things to all people. And going back to the prior point, I think that's why you've seen a lot of these foundational model companies raise so much, because they actually are trying to solve all of the different possible cases a given user might have and answer a question. And they feel, these very smart people feel bad when a model could default and say, I'm sorry, I don't have that in my knowledge base, or I'm sorry, I can't answer that. They feel like they failed. I would actually put forth the opposite, which is if you take a much more narrowly defined problem and you can answer it better and more accurately, and you find the right use case for that model and you're addressed to that problem, I think that's a more satisfying customer experience, user experience.
Eric, final question. What tech breakthroughs are you most excited about next year when it comes to AI?
Oh, that's a really interesting question. I guess they haven't happened yet, so I couldn't yet tell you. Probably the better people to answer that would be the researchers who are putting a lot of their effort into it. But I have to say, I feel a little sheepish too, because if we look back on this time a year ago at the end of 23, we probably wouldn't have expected to see some of the leaps that we've seen already. Now, I think one interesting dynamic at play at the foundational level is a recent piece of media that came out sort of saying there's sort of diminishing returns to some of the foundational level research. And I think we actually might bump into that next year, which is a little bit counter to your question. But there are certain things that when you're mimicking human behavior, actually the limiting factor isn't the technology or the hardware or the software. It's actually human beings' ability to process information. So I'll give you a couple examples. If we're talking about audio, in a natural conversation, you and I will have pauses, we will speak at a certain speed. And at some point, actually, the speed at which we're used to hearing conversation flow is slower than that which a machine can produce. So in order to sound more realistic, the machine actually has to slow down, which therefore means the cutting edge technology isn't the limiting factor in the quality of that experience. I think the same is probably going to prove to be true in video. I think video may be a little bit further off because when you see avatars, they're still a little bit grainy. Necks don't move smoothly. Maybe head motions aren't quite as natural as they might be for a human being. But if you think to the sort of seemingly endless race for better resolution in TV screens, human eyes, for example, don't really perceive the difference between a 4K and an 8K TV. And so for a lot of people, they haven't bothered to spend the money on an 8K TV or 8K screen in that case. So we may also see some of those limits come to the fore in the next 12 months.
Eric, thank you so much for giving us all that insight and those predictions. And I know you need to catch a flight, so we'll let you go. But thank you for joining Beyond the Valley.
Thank you guys very much for having me. I really enjoyed it.
So what's been really interesting about 2024, I think, is the way that we've seen the rapid development of AI, these so-called large language models and foundational models, which we've spoken about on various other episodes this year. They've become more advanced. Products like ChatGPT and other chatbots have been more advanced, and there's been sort of a whole host of innovation happening in that space. What Eric's potentially hinting at there is, do we start to see that pace of development slightly start to slow as some of these limiting factors that he sort of mentioned begin to come in? I think that's going to be a really fascinating story, one to watch for 2025.
Beyond the Valley.
Next, we're talking about crypto, and I'm thrilled to introduce back on the show for a third time Mackenzie Sigalos. Mackenzie is an award-winning journalist and reporter for CNBC in the US, covering artificial intelligence, fintech, and the digital assets sector. Thanks for joining us, Mackenzie.
Hey, thanks for having me.
So before we get into it, I do need to mention that we are going to bring up the predictions that you gave us last year, and we're going to sort of talk about what you got right, and if you got any wrong. You may not have. We'll find out soon enough. But before we get to that, let's talk a little bit about crypto. So, as we're speaking, crypto's come off the back of a huge rally following Donald Trump's election victory. What is the industry saying about what his win means for crypto?
What's so interesting about the Donald Trump win and the Republican sweep of Capitol Hill is the fact that there was this about face. I mean, when Trump was in office the last time, he was not a big cryptocurrency fan at all. In fact, he was a naysayer. And then on the campaign trail, it was just this cycle of he would say something positive, he would get all of this support, both in terms of publicity and what was being said online, but also tens of millions of dollars would flow in from crypto executives and from, companies in the space. And so I think that this most recent rally that you've seen that started on election day, as it became clear that this would be a sweep for Trump and for Republicans, is really a product of the fact that people believe he's going to deliver on the promises that he made on the campaign trail. Now, most notably, he talked about firing SEC Chair Gary Gensler, and lo and behold, we've got Gensler saying that he's retiring on Inauguration Day. Now, that's not to say that he can't take more actions against the sector. I mean, he's already brought 100 plus enforcement actions during his tenure. But it certainly promises, a more empathetic SEC to the industry. So that's one big promise that Trump made. But he's also talked about, installing people in positions of power who are pro-crypto. I mean, you've already seen that show up in cabinet appointments and people who are around that, should they be confirmed by the Senate, be around the table, have a big say in policy. He's talked about being an advocate of the Bitcoin miners and having them, really aid this infrastructure build out across the country that would also help us become a leader in AI. And these are three of multiple promises that he's made. Another one that it remains unclear how realistic it is, but a strategic national stockpile of cryptocurrency. Trump heavily talked about that on the campaign trail. I'm speaking with people from the industry who behind closed doors are looking at whether that's something that is feasible via an executive order, whether it requires an act of Congress. We've certainly seen Senator Lummis bring forward her plan, a bill that would potentially offer the U.S. a buying strategy. And all of this kind of culminates in a pro-crypto U.S. government for the first time ever. And that's why you saw it ripple into prices.
And Mac, what does this mean for actual applications when it comes to some of the tech developments we're seeing with blockchains and various other cryptocurrencies as well? Is there a sense from the industry people you're speaking to that actually, given that there's a slightly more favorable approach or potentially a more favorable approach to the industry, that there might be a real chance now to kind of build game-changing apps and things like that with blockchain technology and with crypto as well?
Absolutely. At every single crypto event I've gone to the last few years, you speak to leaders from projects of all sizes, and they say that we are spending so much more on our legal fees than we are on R&D. And it has just been this endless battle of trying to keep your head above water with respect to legal challenges. And then what? We see yesterday, OFAC, a judge ruling against them with respect to the Tornado Cash sanctions. And so much of crypto policy in the U.S. has played out in courtrooms, which is not the way that you want to be, see a space regulated. It was Grayscale winning a lawsuit that forced the hand of the SEC to pass the spot Bitcoin ETFs that launched in January. You saw, separately Ripple win a lawsuit with respect to, deeming XRP mostly not a security. And that's another huge point of contention in the U.S. So kind of going back to your question, Arjun, it's really, I think that the optimism is that, yes, we will see more favorable courtrooms. We'll be able to hopefully see hard and fast rules come from Capitol Hill so you don't have to mediate so much of policy going forward, with the rulings of judges. And then I guess the third point here is just the fact that Congress for years, there have been varying bills that have been brought to the floor to offer some sort of crypto market infrastructure bill, which is really what's, held up institutions from jumping in because they needed hard and fast rules. There are a couple other nuances in policy like SAB 121, this very niche accounting bulletin that the SEC has. It basically said that banks have to treat cryptocurrency as a liability on their balance sheet, which was a total deterrent from them actually doing it. You get a new SEC chair in, even in an interim capacity, you roll back that accounting rule and, you really start to to open the doors to institutional money in a way that didn't exist before. The last point that I'll make is that being pro-crypto means different things to different people, right? And so when you think about building in the crypto ecosystem, that's not really as much of a Bitcoin thing. It's more of like, so much of DeFi is built on Ethereum rails and on Solana rails. And Bitcoin, we've seen like new bells and whistles with runes and things like that launch in the last like year or two. But I think that the people who got their asks in early, who have been more organized in the crypto lobby, have been Bitcoiners. So I don't know. Like I do think that we're going to see a more progressive stance on the industry more broadly, but with respect to like builders having more flexibility to do what they want, like I am curious like how organized that lobby becomes now in this like Trump transition window, or in the first few years of his term when he has a lot of unprecedented power with a Congress of Republicans behind him.
I'm also curious, Mackenzie, about the approach to regulation, because there's one thing an administration being open and pro-crypto and saying, hey, we're not going to over-regulate the sector, etc. And it feels like there's a sense that a big sigh of relief from the industry saying like, phew, at least, we're not going to have to deal with the SEC now and various other things. So there's one thing doing that and allowing the kind of sector to kind of run wild. But then it is also, the other side is, how do you then be pro-crypto but bring in the rules that the industry supposedly has been asking for so long? So under the current or the new administration next year, are we expecting more regulation around the cryptocurrency industry? Or do you think it'll be very much a hands-off approach?
I think it's the former, because for years now they've been trying to get a bill through that would lay out who has regulatory oversight of the industry. And the reason that people don't like Fit 21 as much, even though it got a lot of bipartisan support, you saw a lot of Democrats cross the aisle to support it. What people don't like about it is that it actually gives the SEC new powers of oversight. And so J.D. Vance, before he got pulled into the presidential races, Trump's VP pick, was working on his own bill that apparently like rolled back the SEC's purview over the digital asset sector, gave a lot more of that regulatory control to the CFTC. And so I think that the thought process was, why race through a bill in the lame duck when we're about to have a Republican-controlled House and Senate? We can kind of have our way with a bill that would do exactly what we want with the digital asset space. And I think that is what the priority is going to be in 2025, just definitely getting a law put into place that lays out who is meant to regulate the sector with a heavy skew to the CFTC, because that remains like one of the big points of contention, like these thousands of altcoins, all the cryptocurrencies that aren't Bitcoin, which is pretty, safely been categorized as a commodity for a while now, even by Chair Gensler, creating a better system than the Howey test to determine which of these altcoins are securities and which are commodities. And of course, the heavy preference of the industry is to say that they're all commodities and to be regulated by the CFTC, which is, typically softer on oversight. So I do think that one, like to your point, yes, they absolutely want a law that will make it very clear who's in charge, because like the biggest complaint, like I've heard the phrase regulation by enforcement tens of thousands of times in the like interviews that I've done over the last few years. I'm sure you guys have too. And that's the biggest complaint. They're like, even Coinbase that listed and went public in the US, like they've been dealing with a legal battle with the SEC for over a year now. You've got Robinhood. They got a Wells notice in May. You have a new chair come in, and maybe that doesn't materialize in a lawsuit. And the other piece of legislation that people are really excited about, guys, is a stablecoin bill. And it kind of gets to this larger narrative of US dollar dominance, enshrining some sort of formal policy around that. Like I personally have questions around whether the US government would ultimately want to nationalize Circle and have USDC become like the de facto digital dollar.
Brilliant stuff, Mackenzie. That was insightful, and I'm sure our listeners will appreciate feeling like they're going to know more about what's coming down the track for next year. But it is that time.
Oh, no. Back to my 2024 predictions.
2024 predictions, or 2023 for 2024. So you said that Q1 is going to be all about spot Bitcoin ETFs, which I think is Nailed it.
Nailed it.
I think it's fair to say.
To be honest,
that's correct.
Mackenzie, I'm looking at Tom's notes right now, and you have done very well.
Okay.
Very well.
Ethereum ETF will be next.
Check.
Then you said check. Then you said halvening and rate cuts will see a bull run for Bitcoin and crypto.
Oh my God, check,
Yep.
guys.
Check. 3 out of 3.
Okay, so then you cited Bernstein research that over the next 18 months, Bitcoin would reach $150,000.
So 18, that puts us into June 2025.
So
I stand by
So
that. I'm doubling down.
So we're still doubling down.
Yeah,
There we go.
Yeah, absolutely. I love that. Double down.
Yeah.
Here we go. I can't wait for the next predictions. And then, so Arjun, off the back of that. So this is actually more.
No,
about,
I
no,
didn't-
you didn't say this.
I didn't
you
say
just
this.
you'd heard this. Don't worry.
These
I'm
were,
not quoting you.
This was a collection
calm
of
down.
prize. I can see your notes, Tom. I just
No,
want to get in
I
front
don't
of
worry.
this.
I know. This was a
what's
collection of So no, he just heard from people that he's heard from that Bitcoin could get to $60,000 up to $500,000.
Various price calls.
Various
Yeah.
price calls
Yeah.
by the end
Yeah.
of. But I just wanted the last one. Well, actually, it wasn't a prediction, but I did want to. You didn't anticipate that actually the biggest sort of uplift that we've seen in crypto has actually been the Trump presidency or Trump being elected, which has sort of done more for the price of Bitcoin and other crypto than say the halving or the ETFs. Would you agree with that?
Oh, completely. They came out of nowhere. It was like this spring that he started to very slowly adopt this pro crypto stance, largely because a lot of people in his inner circle, namely his children, were super into crypto and they got him into it.
Yeah.
There you go. So, Mackenzie, you've done pretty well.
You've done really well.
Yeah.
You've done really well.
It's like an A minus.
Yeah. I'm scared later on I'm going to have to face the music as well.
Exactly. Mackenzie, thank you so much for joining us on Beyond the Valley, and really appreciate you giving us your time.
Yeah, thanks for having me. Talk to you in a year.
We'll talk to you. Well, hopefully before then.
Should we do a midterm check-in on predictions?
Yeah, I like that. Maybe your 150,000 will be good. We'll see. We'll touch base June 2025. We'll see you.
All right, thanks, guys.
Okay. Cheers. Bye.
Bye.
She's got so much insight. We speak, Mackenzie and I, through the year, and she puts out some phenomenal pieces on CNBC.com, and they're always so insightful. She's got great sort of industry sources, and you heard it there from that conversation. Really interesting kind of what the industry's saying about 2025. It feels like they're sort of really, really excited. And, when there's all that excitement, there's also be a dangerous time as well. If you're an investor in this, when... Is there a more bull run to come?
Yeah.
Is there a crash to come?
Yeah.
So there's all of that to think about as well, but really, really great insight.
Beyond the Valley.
Right, your turn. You're going to give us the predictions around the US-China tech war for next year. Let's start us off with, well, I suppose this year has been fairly... Well, it doesn't feel like there's been that many developments, but with a Trump presidency, that may change in next year.
Yeah, I think, look, just to set a bit of context, I think the sort of tech battle between the US and China really ramped up under the previous presidency of Donald Trump. And it sort of began when sort of the Canadians arrested the CFO of Huawei at the behest of the US government. And so that is something that really sparked off. But what we saw under the Biden administration is actually a ramping up of those tensions to the point where there were more export restrictions put on things like critical chips and chip making equipment. And the US government was actively trying to get countries it saw as allies, particularly in Europe, to put in, and in Asia, to put in similar restrictions as well. And so I don't see any kind of reversal of that. And if anything, there is a chance here that we see a sort of escalation to some extent of those export restrictions and other restrictions on China in the area of technology, because there is a competition playing out between the two nations. One of the things China's interestingly done in 2024 there seems to be sort of slight developments. For example, we saw Huawei come out with a new phone at the end of 2023, and then it was revealed that actually that had quite a advanced chip in it. And we did a whole episode on this towards the start of the year. Does that signal China's made big strides in chip development? It's more nuanced than that. And we know that, again, we've discussed that. But it shows that regardless of what's happening, there's a clear stride from China to continue to cut itself off from American technology, to wean itself off American technology, and to boost some of its own domestic capabilities. And I think you're going to see that play out a lot in the AI space, and particularly around the large language models and the foundational models, where, you know, some of these Chinese models are going to start, and already have done, but are going to start competing in terms of capabilities with some of the top models being produced in America and in Europe as well.
Could we see China feeling less of the harm that those sanctions have caused it when it comes to exporting its technology or importing technology? Because, as you said, like, they've sort of already started down the road of self-sufficiency when it comes to tech. So, you know, how much more pain can they take when it comes to sanctions?
So I think we're going to see, firstly, various fronts. Firstly, on chip development, there's only so far China can go, because it's impossible to have a completely national, or near impossible to have a completely national semiconductor supply chain. China will struggle with that as it tries to produce by itself more and more advanced chips. That's for sure. Secondly, on the artificial intelligence front, I think you're going to see some pretty good models come out of China. Now, what Eric was saying earlier on in the episode about some of those limiting factors, I think China will also come up against them, because given the export restrictions, they can only get their hands on, you know, a certain level of chip. And so they're going to have to contend with that as they try to make these models more advanced. Can they do that without the latest cutting-edge chips? That's a big question. That's going to require innovation on the model front. And then you look at sort of AI across the sort of industry. You're going to see all the big tech giants talk about it. You're going to see all the big smartphone players talk about it as well. That's going to be a big part of it as well. And I think actually just domestically, there's going to be a lot of discussion in China around the safe development of AI and regulation on AI. This is a technology that the Chinese government will not want to see get out of control. And we've heard some of the major technologists of this world, the likes of Elon Musk, for example, warn about the dangers of super smart AI. And if you think about the way that China's politics is run, it's a centralized government, they're not going to want to see a technology that they cannot control. And so I do think to some extent you're going to see the government laser focused on how this technology can be controlled, developed safely, and that may even mean kind of more regulation potentially, or fine-tuning some of the current regulations in place around AI.
Beyond the Valley.
Right, our next guest, Silvia Amaro, is TV anchor and reporter for CNBC in London. She's always had a passion for European politics, and today we're going to discuss whether the scrutiny of big tech in Europe is set to continue. Thanks for joining us on Beyond the Valley, Silvia.
Thank you very much for having me. It's like my Christmas tradition, joining this podcast now.
A Christmas present, the best present you'll receive all year. So I know you want to start off actually with the predictions you made last year, and we'll sort of work our way to what's going to happen next year. So first off, we talked a lot about the EU AI Act, which, if our listeners remember, at the time in December, I think there was an agreement, a sort of rough agreement, and in March they voted on it, and it actually only came into force in August of this year. You said at the time that there was a positive feeling amongst the EU lawmakers that this was a good thing. Has that panned out over the course of 2024?
I think ultimately, maybe I would zoom out a little bit more, because at the time, on top of discussing what was new, which was the AI Act, we also talked about how it was the end of a political mandate in Brussels. And that context is important for our viewers, because ultimately what ended up happening was that we saw this focus on putting forward, on implementing the legislation that they had worked with in the prior year. So they had all of these new tools, including the AI Act, and what we saw was an initial implementation of these tools. And those include the DSA and the DMA, which at the time we also explained, these are tools that allow the executive arm of the EU to police online content at the same time that they're trying to make the competition fairer across the European market. And because it was this end of political mandate, there was, I believe, an emphasis on trying to show that they could get things done. And so I would highlight the case around Apple and their unpaid taxes, because there was a conclusion here. For 10 years, we were discussing whether Apple was going to be asked to repay these taxes or not. In the end, it was ruled that they owe these taxes to the Irish government. And that was a massive win for Vestager, who had been the person in charge of competition policy for 10 years. And he came basically almost at the end of her mandate. So I think the last 12 months were this effort from European officials to, okay, let's start using the tools that we've developed over the last couple of years, while also trying to finish some of the cases that we've started over these 2 mandates. And now we have a new window. Now we have a new moment in European politics. And this is where I would say, maybe to your next point on the predictions, that it's likely we'll continue to see similar approaches from European officials in terms of tech and tech regulation, but perhaps more aggressive. Because Europe is at the crossroads. I can't stress enough the critical moment that the EU is facing right now. Because they've realized that at the moment, they are not winning the global race. And I know you've discussed these topics on the podcast. You have all the efforts that are happening in China, all the efforts that are happening and innovation happening in America. You had the US Inflation Reduction Act. Where is Europe amongst all of this? So I think at the moment they are at this point where they have to use this new political cycle to address these concerns in the global race. And actually, I was speaking to a professor a couple of weeks back about what we could see happening in the next 5 years. And he was telling me that this is the moment for Europe to reinvent itself and come up with new ways to actually play a role in this global race.
Because you did mention at the time, 12 months ago, that the US innovates and EU regulates is still a mantra that is being spun out by commentators, by analysts, but that can't go on forever. Eventually.
Exactly.
Right.
But there is a realization. It took them a while, really, to get to this point, and we have talked about this in the past. But what I would like to stress here is this new person that we have in charge of competition policy. Over the last 10 years, we've all talked and met Margaret Vestager, but I need to tell you about this person, Teresa Ribera. She is the new competition chief, and she is going to be the one that is going to be leading the regulation and, changes to policy in relation to big tech. So this is the person that we have to basically monitor, follow, as she has just started her mandate. And I actually looked at what she said in the European Parliament a couple of weeks back to explain what she wants to do in this role. And let me just mention these 3 points that she brought up, because I believe they're important to understand what could be happening in the coming years. She said that she will be working on a reform of EU competition policy to, 1, improve the speediness of enforcement. So likely that we'll see a little bit of cutback in terms of bureaucracy and red tape. She wants to simplify state aid rules, and this has also been a problem for a long time here. And she wants to clamp down on acquisitions which prevent innovation. So there's a question mark here, ultimately, how this is going to impact businesses in Europe. Can they actually do more? Can we see consolidation? Can we see companies actually growing? Because at the moment, that's not the case in Europe. They realize that there's basically no growth across the continent. And how can they deliver in the global race if they don't have, the tools to allow companies to do more?
I'm just going to clarify to our listeners that your predictions from last year were all pretty spot on. EU AI Act positivity, and that would remain. And also, as to your point, Margaret Vestager with Apple and following through on some of the regulation that they had already implemented and making sure that they actually completed at the end of her term. That all those things did pan out. So predictions for next year, her replacement and what we might see down the line for 2025. Anything else that you
I would highlight one more thing, actually, because, you brought up the comment of America innovates and Europe regulates. That was, to some extent, the one item where Europe could actually, or the EU, I should say, could be proud of in terms of regulation. We're ahead in terms of AI regulation, in terms of pretty much everything, data privacy and so on. But there's regulators in other parts of the world that are also stepping up their game. Look at what the DOJ is doing in terms of Google. And now at this point, the question that I also have for the EU, okay, you've been doing so much work on the regulation front, but are you going to work with other regulators to actually perhaps combine some of these rules? Because it's also helpful for companies to have similar regulations across the world in order to become global players, right? So I think there's two elements here. The EU is at a crossroads because it realizes that it needs to do something if it wants to continue in a global race in order to have more tech players. And the second item is they're no longer just the only tech regulator to some extent in town.
I'll just jump in, I think, to broaden that conversation out. I think the EU's problem is they've regulated, multiple antitrust actions, whatever else. That hasn't actually spurred any kind of innovation in Europe. That hasn't led to, a new European Google or a European Apple of any kind at this point. And so the issue is much deeper than that. It's cultural. It's the idea that European entrepreneurs are less risk-taking. It's also structural when it comes to the amount of capital available in Europe to fund perhaps risky or later stage projects as well. And often you see some of those later stage projects in Europe being funded by, let's say, SoftBank or another or a US investor. So there's lots of, other issues beyond that. And I think I agree, like the regulation's not going away on big tech, the scrutiny is not going away on big tech. But the big question is actually there is a huge ship to turn around here in the EU in order to spur innovation. But then just broadening that out again, I think the US case is going to be interesting because over the past few years, big tech has been under the microscope from the Department of Justice and, of course, the Federal Trade Commission in the US with big calls now to break up Google, et cetera, et cetera. Under the incoming presidency of Donald Trump, the hope for many investors at least is actually that scrutiny may go away and actually they may be able to continue sort of as they are. And that's going to be interesting to see because they may continue on a path with the current practices they do and, have a very different reality here in Europe. And then the third part of this is China. On regulation as well. I think China quickly realized that the regulatory crackdown we saw at sort of the end of 2020 through to 2022 was a really bad move. And it really hampered innovation. It slowed down the growth of its big tech companies there and perhaps wasn't the right path to go. They're trying to walk a much finer line here in terms of how to regulate big tech. But on AI in particular, they have been laser focused on what to do with this technology and to ensure that it's under control. And that's going to be something I think from the Chinese perspective, they will continue to look closely at AI. And I think you'll see a lot more noises made from the Chinese regulators about how companies should be developing that technology and how, it should always remain under control and the view of Beijing.
And just to your point on the structure, you just reminded me of some of the conversations I had earlier this year. Because sometimes, I have this privileged role where I get to speak to officials in Brussels, so people that work for the EU bubble, let's call it. And then I also get to speak to national officials. And there's this divide. You hear the national officials, to some extent, complaining that the EU institutions are not doing enough. And then when I spoke to Vestager back in June, she said that the problem in order to have more competitiveness across the bloc was actually that the member states were not aligning their capital targets, really. So, this has been an issue for the longest time, so I'm not sure whether they're going to fix that in the near future. But I think there's just this realization that ultimately something needs to be done. So let's see what that's going to be, what Teresa Ribera is going to try to achieve in her first year of mandate. But something needs to happen here.
Fantastic stuff, Silvia. Thank you.
I hope that's helpful to our listeners.
Always helpful. Always helpful. Brilliant to have you on the show, and we'll see you in 2025, hopefully.
Yeah, I'm expecting so. So as I said, it's my Christmas tradition. I'll be here in December next year. Hopefully, you'll have me again.
The yearly check-in with Silvia Amaro.
Sounds good. All right. Thanks, Silvia.
Thanks, guys.
Beyond the Valley.
Our next guest is Ben Wood. He is Chief Analyst at CCS Insights and is an expert in consumer tech. He is also considered a friend of the pod, having been a guest a few times this year, and he joins us on a highway in a car just outside of London due to unforeseen circumstances. So thanks very much, Ben, for joining us on Beyond the Valley.
Great to be back. Thanks for having me along.
This year, we've had more foldables. We've had developments on mixed reality, Huawei's new operating system, smart rings. It's been a crazy year in consumer electronics. What do you think are going to be the key developments next year?
Well, I think it will come as no surprise that AI is going to continue to dominate the space with regards to being an omnipresent theme. And I think that, given the valuations associated with AI as well, it's something that everybody wants to kind of hang their hat on. That will transcend all of those different areas. There's going to be a big push, I think, in 2025 where we're going to see on smartphones the view that trying to inject some new life into them using AI to change the user experience. The UI becomes powered by AI and phones become more intuitive will be a big story from phone makers, probably starting with Samsung with the launch of their new Galaxy series in the new year. We're going to see that also having a big impact on things like wearables, where you're going to see AI-powered insights. And as you know, when we've talked previously, we've made predictions around the fact that we're going to see more personal AI and health, and the intersection of health and technology is a great example of where that can happen.
And Ben, in terms of what we can expect from the sort of major players, so far we've seen some interesting but maybe not groundbreaking AI use cases. Are we expecting those kind of personal assistants and features on the smartphones and other devices to be a lot more advanced in 2025?
Well, you're going to see a number of different approaches. Firstly, from Apple, I think you're just going to see this very step-by-step tentative approach to rolling out features as and when they're ready. And Apple Intelligence is already adding some nice little bells and whistles like summarizing content and improving the way you can edit pictures and those sorts of things. But they're not really game changers. But Apple will just quietly, slowly mine all of the assets they have and the fact that people have so much content locked up on their iPhones that they'll improve the experience. Samsung, in contrast, and others, I think are going to be pushing, and we've seen Chinese manufacturers like Honor as well talking about this, pushing into the domain of so-called AI agents, where the AI is not just simply working on the apps and the kind of core operating system that the manufacturer controls, but can go off and do interactions with third-party applications. So a good example was one where Honor demonstrated the fact that it was possible to ask WeChat to find out if you have any subscriptions live, and if so, did you want to cancel them or modify them? And that's quite complex because it's not just using the applications that Honor controls. They have to go off and they have to talk to a third-party application. And I think you'll see that being a big theme, particularly for Samsung as well, who will be looking to take AI to the next level in 2025.
So, Ben, we've spoken about software, but do you expect any major breakthroughs in hardware innovation in 2025, whether that's in wearables or headsets of any sorts or laptops or smartphones?
Well, there's a lot to unwrap there. Let's go through those in order. So on smartphones, there's a lot of interest in flexible display technology still, and we've seen Huawei with their trifold device. I think we'll see more of those kind of experimental concept devices, but I'm not convinced they're going to move the needle, and the sheer expense associated with them means that they will remain very, very niche. Beyond that, on smartphones, it will continue to be an incremental story. Cameras will continue to be a big focal point in terms of the way in which devices are sold. PCs and laptops, very interesting there with this transition towards ARM, the efforts being made by Qualcomm, and whether Intel has a future in that space. a very, very tricky time for them right now. They're hugely entrenched with the Intel architecture, and you would think that they will survive there, but certainly there's a great deal of uncertainty and some great results coming from the ARM-based solutions. In wearables, smart rings are certainly on a roll. If you look at the recent valuation of Aura, the partnerships they've made, for example, the latest one with Dexcom, looking at continuous glucose monitors, I'm super excited about the interaction of technology and health. I think we, as a society, have an absolute imperative to improve the way in which we do more preventative and predictive health. And I think technology has a big role to play there. And on the final one, headsets, virtual augmented reality, spatial computing. The likelihood is that we will see some news from Google with regards to what their expectations are in the spatial computing space. And there's these ongoing promises from the triumvirate of Google, Qualcomm and Samsung to have some kind of headset. So that could spark some interest. But I can't say I'm massively optimistic about any game-changing moves there. And the challenges that Apple have been having with Vision Pro shows that this is a very, very tough nut to crack.
Ben, lots to look forward to for next year, and we really appreciate you giving us your time to talk us through it.
A pleasure. Thanks very much for having me along.
Yeah, all very pertinent points. I think the points about sort of where AI is going on devices are going to be interesting, and how device makers are going to be experimenting with that. Also, things around potentially new concept devices around hardware. Everyone wants some new stuff and likes to see new gadgets. So that's something that we'll keep an eye out for. We've got lots of tech shows again next year.
Beyond the Valley.
Our last guest is CNBC's tech correspondent here in London, Ryan Brown. Ryan covers a whole host of topics, but he's here to discuss fintech and what innovations might be around the corner for the technology that delivers financial services and products to consumers. Ryan, thanks very much for joining Beyond the Valley.
Thank you for having me.
Let's start by asking how much AI adoption has there already been within banks and other financial institutions, and what can we expect next?
Yeah, sure, Tom. So I think it's interesting. I think over the past year or so, you've really seen banks embrace AI more in kind of the back-end compliance procedures. So things like KYC, Know Your Customer, KYC, anti-money laundering, AML, those kinds of just let's search for the criminals and the scammers and fraudsters and make sure that we don't have bad actors sort of, intervening into our systems. The next thing that I think will be interesting to look out for...
just to interrupt, you have three predictions, so this is the first
This is the first.
Okay,
this
here
is
we
the
go.
first, yes. So getting straight into it. So the first big prediction I have is that, moving on from the kind of the back-end AI compliance that we've seen in banks, we're going to move into more consumer applications and actually a proper Gen AI assistant or agent that would just sort of be your everyday banking assistant. So if you have questions about what's the best mortgage to apply for, or what's the best savings pot to allocate my money towards, there'll be an actual Gen AI agent that could actually assist you in those questions. The big challenge for most banks actually getting to that stage has been those very compliance questions that they're sort of thinking about in the back end. So that'll be an interesting thing to navigate. But that's my first big one for the new year.
Just a broader point on these chatbots from companies and banks as well. They're woeful at the moment. You try to talk to one of them.
There we go.
Yeah, you try to talk to one of them, and obviously they can only do a limited set of things. They're not really sort of generative AI at this point. But I always try to hack them and say, use the phrase that will most that will get them most to put me through to an actual human. You ever do that? Like send me to an agent. Or
just
but
don't make any sense, and then the AI bot is
just gets confused.
It's like, okay, a human needed.
Yeah, is that another app? So you mentioned sort of the sort of AI agent, maybe potentially in your app, or if you want to talk to it about some of the products and stuff. Are they also experimenting with Gen AI for customer service?
Yep, that's being talked about right now. I spoke to an executive from ING, the Dutch bank, and that's something that they're very much kind of investing a lot of time and energy in. But it's more in the research kind of phase. It's one of those processes and sort of like long-term projects that they're trying to put their efforts into. The thing that's proven an obstacle to that is actually the compliance aspects and what happens if a Gen AI bot takes your data as a banking customer, and that potentially gets exposed to say like a LLM, which ports all the data that you feed into it into a data center in San Francisco, for instance. You have less visibility over that than you would if it was sort of inside your own corporate barracks, so to speak. But yeah, I mean, it would be great to see just an actual chatbot that could just assist you in that process and not be terrible. The experience that you and I and many others have felt so far. But I think that we'll start to sort of actually see that come to. There's a lot of big work being done behind the scenes, and I think banks they're ready to sort of like put that out there. They just need to make sure it's all the I's are dotted and the T's crossed.
Okay, prediction number 2 is about a hotly anticipated IPO.
It is indeed, yeah. It is the big multi-billion-dollar question. When will the buy now, pay later company Klarna go public? Just earlier this year, Klarna actually filed confidentially to go public. We don't have many details yet as to what will the pricing look like, how many shares are going to issue. That will kind of indicate how much the valuation will be, which will be really interesting for Klarna. This is a company that's gone from $46 billion valuation at about 2021 down to $6.7 billion in just a year later. So massive 85% drop in market cap there. The current indications, as of August, I last heard from sources that they're looking for a $15 to $20 billion valuation. That's the kind of secondary market implications of what we might expect. But again, that's the big multi-billion-dollar question I'm sure very many bankers are asking themselves right now.
Okay, prediction number 3. Open finance. Actually, just to tell you a story. Yesterday, I went up to Ryan. I said, "So, what predictions are you going to be giving us?" And he listed. He's like, "Do you know what open banking, open finance is?" I was like, do you just tell me? Happy to. Go on then.
Yeah.
Take it
I'll
away.
Get into it. That's our jobs. It's breaking down the very mystifying terms and buzzwords used in the industry. Fintech loves a buzzword. Open banking has been a big buzzword over the last few years. Embedded finance was another one that kind of referred to banking products that are kind of behind the scenes in the likes of Uber or kind of the mainstream apps, retailers that you constantly use, but they're going to use banking products behind the scenes. You don't see the sort of provider up front, but you use those products with the actual retailer that you buy products from. The next big wave is going to be something, I think, something called open finance. Now, it's a term that if I say it, your eyes will glaze over because it just sounds very obscure. But this is kind of the next evolution of that. So where open banking has succeeded, I think, over the last few years is actually you'll notice things in your day-to-day kind of financial activity where you make a payment on a certain merchant. I'm not going to name a specific one to bias and all that sort of thing. You make a payment and it will link you out directly to your bank page, so you can actually just make a payment using your own bank details. That's a big step because it drives down the costs that's normally involved in MasterCard and Visa taking huge chunks out of the fees that are required to process those payments. The next evolution, I think, will be investments and trading and wealth and insurance and those other parts of the financial chain that are going to start coming online with opening up those kind of infrastructure, back-end infrastructure to new startups, new products, basically opening up competition to smaller players who have seen a lot of that kind of progress on the banking side, but not so much on insurance or other parts of financial services.
What would that look like potentially to a consumer? Because I know now when you sort of go into your banking app, you can do things like linking one account to another. So if you have an account at one bank, you can see it in the other bank's app and things like that. So with open finance, what could that potentially look like?
It could be similar, really. It could be, if you are a Robinhood customer, you could potentially see some other brokerage apps appear in there, Free Trade, Trading 212, that sort of thing. It could also be a case of you could actually actively manage some of those pots across different platforms. It's a bit obscure at the moment because some of those aspects of interoperability and actually managing different finances across different apps, it's a bit of a competition question. You don't want to give everything away to your direct competitor because that obviously means you're basically giving away your secret sauce. But I think that kind of better improvement of your financial life, just ability to see what am I invested in, what ISA am I managing. Sometimes I forget how many ISAs, pension pots I've got open. So it'd be good to just have like a clean view of like where my money is actually being allocated. So I think that's down the track that we might notice in the next year.
Beyond the valley.
So that was fun. That was the last prediction. You learnt a lot?
Yeah, I think there's some really interesting things to look forward to next year. And I think one of the interesting things is pretty much almost everyone we spoke to mentioned AI in some way, whether it was, Ryan with sort of the Gen AI chatbots, whether it was Ben Wood there talking about sort of how consumer electronics companies are going to be talking about AI next year. And again, it's a theme that is clearly going to dominate.
Okay, I did say at the top that we would look at the predictions from last year's episode. So
my heart's racing a bit, I'll be honest with you.
So we've discussed Silvia's predictions and Mackenzie's, but it's now your time, Arjun. So I asked you 12 months ago, can we expect more investment and excitement in AI? And you said yes. More models will be released, more LLMs. You said, though, that more models specific to particular industries. So there would be models released for the financial industry and the healthcare industry, and they'd get smaller and possibly more efficient. Have those things transpired?
So to the point around more models, there are more models on the market. There's now more advanced models as well. And so there has been an explosion of models, that's for sure. To the more specific models, they are happening, but not widespread yet, I'd say. I met an interesting company while I was, I've been sort of on the road quite a bit this year. I met an interesting company at a conference recently who is working on a sort of effectively an AI model for healthcare around sort of understanding proteins, which could lead to drug discovery and things like that. I've met another company that has launched a model that's made up of lots of smaller models, so that if you got a query for its AI, it can sort of almost pass along these various smaller models to get you the answer. So there's experimentation happening. But it's not massively widespread at this point. The large language models still are dominating the conversation.
Okay, and you also said that NVIDIA would face more competition from the likes of AMD, American company, and others. Has that panned out?
Straight up wrong. Straight up wrong there, Tom. And so what I'd say is NVIDIA has not faced serious commercial competition as of yet in 2024. It still dominates. It's still the gold standard, or seen as the gold standard. And I remember speaking to one CEO of a sort of infrastructure company who just basically said, well, our clients only want us to build data stack or server stacks with NVIDIA chips. And so that AMD competition, they haven't quite figured it out yet, it seems, AMD. They haven't quite lived up to the promise at the start of the year. So that hasn't happened. One of the things I will say is there is a lot, and I mean a lot of experimentation going on from startups, very well-funded startups, I'll have you, that are looking into what goes beyond GPUs, or these graphics processing units that have made NVIDIA so popular. And many of the startups I've spoken to have said they're great for training these huge models, but actually as AI develops and we come to what they call inferencing, i.e. the actual use and application of these models and the AI, then we may need to rethink that architecture, because there may be a more efficient way. Now, a lot of those discussions are in the early stage, I'd say. And so that real competition on that front is probably still a little while away. And in that time, NVIDIA could come up with something even better to sort of fend off some of that competition. So no, NVIDIA's, and I think, Eric Liaw at the top of the show also said, that conversation around AI is likely going to be still dominated by NVIDIA into 2025. So yeah, I was wrong.
It's all right. It's okay. Don't feel too bad. So we also talked a lot about EVs last year. It was a whole subject of our predictions for 2024. And this year we haven't talked about EVs. So I think just by that, omission is telling. You said that Tesla and BYD, Chinese company, would be market leaders globally. you did say that traditional automakers would get in on the act when it comes to EVs, that Chinese makers would expand internationally. And we talked a little bit about tech companies like Amazon and Xiaomi that would try and get into the electric car market, maybe not with their own cars, but, with the tech that helps support those. And that obviously there were electric car infrastructure concerns. Has that improved? We will find out. So just to the first point, Tesla, BYD, still market leaders globally.
I think I'm happy to say all of those things are true.
There we go. See, you're back.
Yeah, I'm back.
Round one, but round two, you.
Yeah. No, all of those things are true. BYD and Tesla still remain the market leaders. The Chinese automakers, and in particular BYD, have been very aggressive in expanding overseas. Now, we know the European Union slapped tariffs on Chinese cars or China-made cars being imported into Europe. So that has been somewhat of a headwind. But you're still seeing these Chinese automakers invest and expand into other countries. So that is indeed continuing. In the sort of tech company front, I think most of actually the activity has been in China. Huawei is continuing to push into the auto business from what I mentioned, the technology in the car. Xiaomi has launched and is selling its own car. So
actually that's gone further than you'd anticipated.
That's gone further. And so there's a lot happening there. And, whilst the conversation around EVs is probably quietened a bit, I think there are genuine concerns for the industry, though. I think the infrastructure thing still remains key. I was in Finland this year, Helsinki. And this, again, though the countries there in the north, they're pushing quite hard for EVs. But one of the drivers who was I was in an EV, and he said, it's great when you're in the city, but obviously, Finland's a vast country of a lot of, not many big cities. He says, as soon as you kind of leave and you're in the countryside, the infrastructure's not great. So, great in the city, but this is also a concern, I think, everywhere. As soon as you leave and even in big cities like London, it's not great.
No.
So that will continue to be a concern. And I think what will be closely watched is whether people are still convinced. That's what it's going to come down to, whether people are still convinced that EVs are good, whether it's convenient, whether it's cheaper for them to run. All of those questions will remain, and whether they can fork out on what are still quite expensive EVs. That's going to be big questions going into 2025.
Great stuff, Arjun. That's it for this episode. Before we go, please follow and subscribe to the show, and you can even leave us a review. And if you want to contact Arjun and I or have a question about this episode, then email us at beyondthevalley@cnbc.com. Thank you, Arjun.
Thank you, Tom.
We'll be back next year for another episode of Beyond the Valley. Goodbye.
Beyond the Valley.